Hi, good afternoon, everybody. Ethan here from Investing Note. Thank you for joining us for this, exclusive webinar on insights on Hong Kong and Chinese stocks. Just let me make sure that the video is playing. Awesome. All right. Okay, thank you everyone for joining us. Today we have two special guests. First of all, it's actually Jin Yuan from Investing Note. If you don't already know him, he's our most popular member for last year. And he is one of the veteran community members that have been joining us since 2018, if I'm not wrong. And he covers a lot of insights across Singapore, US, and Hong Kong as well. All right. So the other special guest we have with us is actually Alvin, director at UBS, right? The DLC department, where he is heading the DLC product list. Alvin, you want to say hi?
Hello. Hi, everyone.
All right, awesome. So before we go into the webinar on the insights of the Chinese market, right? Let me just show you guys on the trading tournament right now. All right. So if you are not already in our UBS Leverage Trading Tournament 2022, please join, because we are actually giving out quite a few registration prizes, including an Apple TV, Samsung monitor, and a Nintendo Switch. All right. So all of these are actually worth $400 each. On top of that, we have another campaign running, which is our year-end giveaway, which is we're giving out a staycation. All right. All you got to do is just fill in the form. You'll be automatically enrolled into the tournament, and we'll give you one chance to win a staycation at Sofitel Sentosa. It's a very beautiful resort worth $600 for 2 day, 1 night stay. All right. So let me dive straight into the tournament. All right. So as you can see, our tournament starts at 9 o'clock, right, for the US index DLCs. So to my knowledge, right now we do have two specific index DLCs, right? Nasdaq and DJI. All right. So those DLCs start trading at 9 o'clock and they end trading at 5 o'clock. For the Hong Kong index and stock DLCs, they actually start at 9:30 and they end at 4 p.m. So all of these DLCs do have a lunch break from 12 to 1. So you might want to take note of that. Other than that, we also this year the tournament is different because we brought it to mobile. So you can actually trade through our mobile app. So if you go to the main page here, click here and it will dive you down straight into the tutorial on how to trade. All right, so let's take a look at the leaderboard here as well. So the leaderboard, okay, so we have the top 10 guys. So their average return, whoa, is definitely more than 50%, right? Not the top 10, but at least the top 5. So you can see if you click into the Bear Prowse portfolio. So if you guys don't know, the Bear Prow actually won one of our previous tournaments back in 2019 or 2020. Can't remember exactly, but he was one of the winners. So if you click and you can see what he's actually trading, right? And all the transactions, all his open positions are transparent, as well as closed positions. Oh, he haven't closed any positions yet, it's still open, right? So these are the DLCs is trading. Alibaba long, Meituan long, Tencent long as well. Okay, so another thing to note is that we did an update of all the new DLCs that are listed today. Like I mentioned earlier, Dow Jones 7x long, 7x short, Nasdaq 5x long, 5x short, Dow Jones again, Geely, Tencent, BYD, Xiaomi, Wuxi. So all these are the new DLCs that are available to trade in the tournament, as well as the real market. Okay, because our tournament simulates the real market. So this is all. I want to keep it short. I don't want to bore you guys with the tournament. So if you haven't registered, please do the registration, right? Other than that, the grand prizes $4,000, first prize, second prize $2,000, third prize $1,000. This is cash, right? So if you think that you cannot make the top prize, you think that maybe your trading style isn't that good enough, you're not that confident enough, never mind, because we are giving out $30 e-capital vouchers to 30 lucky participants. All you got to do is make at least 3 trades to get one chance. The more chances, the more you trade, the more chances you win. All right. So without further ado, that's my sharing for the tournament. You guys know where this is, right? It's up here and on our website. All right. So I'll pass my time now to Jin. All right, Jin, over to you.
Okay.
Yeah, so I think right now I'm going to ask Jin a few questions, right? So I think yesterday, okay, even before yesterday, the whole entire Hong Kong market was a little bit, on the bearish side, lah, right? We would say.
Yeah.
But yesterday,
Very bearish.
there was yesterday, there was some report, of course, some rumors, I would say report that, they might be opening up, at least for the policy makers. So Jin, I would like to ask you, right? What's the current state of the Hang Seng Index?
Okay, the Hang Seng Index allow me to share my chart, so I think it'll be easier
Yes.
for me to explain. Okay. Just a minute.
No worries.
Okay, share. Can you see my screen now?
Yes.
Yes.
Able to see? Okay.
Yes, exactly. Can.
Yeah. Okay, so just a minute.
Yeah, so we have to talk about the Hang Seng Index the first.
Okay, as you can see from the screen, it has been, it's clear cut that it's on a downtrend, from a high of 30,720 points somewhere in mid-February here, all the way down to about 15,700 plus points as at lunch break today. So as you can see, the trend is down. So the reason why the trend, sorry, I think the thing moved out again. So sorry about that. It's quite my apologies. Are you able to see the screen?
Yes.
Yes. It's a bit laggy. Okay. Okay. So as you can see from the screen, it's slightly up today, and then it broke, past the resistance here, the red line resistance here. So anything below this red line resistance means that the Hang Seng Index has fallen by more than 50%. So the fact that it has, gone up a little bit above the resistance show that, there's some positive signs of some rebound. Could be because of the, like what Ethan said just now, unverified news of possible reopening of China, And another thing is yesterday, the Caixin manufacturing PMI showed better than expected, figure, which also gives probably some clue that, we are, a little bit past the bottom and about to rebound. As to whether or not it will really rebound, I think we can only wait and see if this particular candlestick closes above this resistance point. And if it does close above this resistance point, then we can maybe be a little bit more positive, that we could see some possible near-term rebound of the Hang Seng Index. This is my near-term view of how the Hang Seng Index may move. If it drops below this resistance, it drops under this support, resistance and support, then we could possibly see the index go lower. So some of the reasons why the index has been falling quite badly this, over since mid-February 2021 is number one, the COVID lockdown or the COVID restrictions in Hong Kong. No doubt the restrictions have, most of the restrictions have been lifted, But the thing is that for travelers entering into Hong Kong, correct me if I'm wrong, think they still need to do some pre-event testing, do a pre-event, the ART test upon arrival. Number two, they need to be fully vaccinated. So this could turn some of those visitors away to some other countries which such requirements weren't allowed, not needed. So this could be one of the reasons, for the Hong Kong market continue to fall. Number two, of course, is China's continued COVID lockdown. For Hong Kong, the China market forms a huge, percentage of spend by people from China. So in my opinion, as long as the Chinese market remains closed, then the Hong Kong retail market, the hospitality, as well as the tourism market could continue to suffer as a result. And number three, it's fear of the regulations imposed by the Chinese government, such, for example, are those by, the anti-monopolistic measures that's like slap on Alibaba, Tencent, Meituan, and hefty fines are being imposed on these tech companies. So leading the share prices of these companies to fall. And, the index, which is, have a huge weightage on these companies to, be affected as well. The broad market is affected. So that's my view, of why the market, the Hong Kong market is performing so badly.
All right, thanks Junyuan for sharing. So in the near term, you're looking at for it to actually rebound a little.
Yeah,
right to say that.
Rebound. Yeah, if indeed the news on China's reopening is true, then for sure we will see some very good rebound in the Hang Seng Index. Not just the Hang Seng Index, but many of the counters listed in Hong Kong.
Awesome. So, okay, the next index we want to talk about is the Seng Tech Index.
Okay.
Do you have some charts on that?
Yeah, okay. So now let me share my chart on the Seng Tech Index. Yeah, you can see from the screen. Let me see if I can zoom a little bit. I think it's a bit laggy. Okay, never mind. So you can see, without zooming all the way out, you can see that it is, as negative as the Hang Seng Index. So, but the thing is that unlike the Hang Seng Index, which has fallen by about 50% from its high, the Hang Seng Index is currently down by about 70% from its high. This is due to, like I mentioned earlier, the hefty fines imposed on the tech companies like Alibaba, Meituan, and Tencent. All three of these companies constitute about a 25% weightage on the Hang Seng Tech. So naturally, if the share prices of these three tech companies were to plunge, the Hang Seng Tech Index will be negatively impacted as well. So another thing which led to the Hang Seng Tech Index to plunge so badly is also because of the the common prosperity policy that is imposed, that is implemented by the Chinese government. And the tech companies last year, they were asked to cough up quite a fair bit of money to this initiative by the Chinese government. And this also led to the share prices of these companies to fall. So as for the near-term outlook, I think it also looks a little bit positive because, as you can see, today is the second day where, we are seeing a green candlestick. So probably in the near term, we could see some positive rebound up to around the 3,600 mark. So for those of you who are thinking to go long, maybe you can take profit at around this level. But by the way, this is just a disclaimer based on my own technical analysis, and they are not meant as a buy or sell call for the Hang Seng Tech. So you should always do your own due diligence before you take on any trading decisions. Yeah.
Yes, disclaimer, guys.
Yeah.
All right. So Yeah, you have a PDF to be shared, right? Julian?
No PDF. Okay, I do have this PDF is on the 30 constituents of the Hang Seng Tech. So for those of you who want to know what are the companies that constitute the Hang Seng Tech, you can go to my website, which is, sorry, there's a typo here, which is the singaporeinvestor.sg/HS Tech. You can download the document here, which shows you all the 30 constituents comprising of the Hang Seng Tech Index.
All right. Thanks, Julian, for sharing. So
You're
I
welcome.
think the next question is, right, so what are some of the key catalysts and the key risks of placing eyeballs and trades on the Hong Kong market? Maybe you can share some with the audience.
So let me talk about the catalyst first. So one of the big catalysts will be the relaxation of the zero COVID policy. As you can see from the market, Hong Kong market yesterday, it went up by more than 5% from unverified news that the China government might relax some of those COVID restrictions. Just think if this news is true, the Hong Kong market will definitely see a huge rebound in the near term, at least in the next one or 2 weeks. So that's number one. Number two will be signs of the Chinese economy returning to growth, where we look at figures such as a positive GDP growth, employment figures, purchasing managers index, or PMI for short, showing growth. Yesterday, I've also mentioned earlier just now that as a result of this Caixin manufacturing PMI registering a better than expected decline, the Hong Kong market also climbed quite a fair bit yesterday, apart from news of the possible relaxation of the COVID. So, so we can take a look at some of these figures for clues of a possible rebound. And number three will be the thawing of the US-China relations. As we all know that the relations between these two big superpowers are at the all-time low right now. And then there are news yesterday saying that the China Foreign Minister Wang Yi had a talk with this US Secretary of State Antony Blinken on the phone. So as a result of this, people are starting to guess whether is this the start of the improvement of relations. But in my opinion, I think it still remains to be seen. I think the main thing that I think we should look at is whether or not the leaders of the two countries actually meet up in the G20 summit in Indonesia in 2 weeks' time. So if they do meet up and something good comes out from their face-to-face conversation, then it could really be the start of something good coming up. But until then, I think we should be a bit cautious on this. And then finally, another big catalyst will come if there are signs of a reversal in fortunes in some of those big companies listed in the Hang Seng Index, mainly HSBC, AIA, Tencent, Meituan, and Alibaba. These 5 companies have a total of about 37% weightage towards the Hang Seng Index. So if the fortunes of these 5 companies were to improve in terms of their financials, and also for the tech companies, the Chinese government say, okay, we are done with all these regulations and all that. I think the Hang Seng Index will definitely see a good rebound up. So these are the catalysts. So as far as the risks are concerned, number one, the number one risk I think will be the invasion of Taiwan, which could potentially lead to World War III, involving the United States, Taiwan, and China. So I'm not sure whether at this point in time other countries will be involved as well, but the economy of these countries will definitely face a meltdown. Do I see this happening? I think at this point in time, the probability is very, very low because of the stakes involved. So that's number one. Number two will be China's insistence on COVID zero policy. I mean, I can understand that the Chinese government wants to save life. I mean, if you can see from examples like in countries that open up, that where we see a huge climb in the number of COVID cases, and the same can also be said for the number of death cases. But the expense is that the economy will take a further hit, and as a result, the Hong Kong index will also, suffer as a result. So very much that will depend on whether or not they relax the policies. We can only wait and see on that front. And finally, will be the Chinese government further punishing the tech companies for anti-monopoly state, for data security breaches, and for whatever things that they may come up with to further impose fines on these Chinese companies, and then also with the pursuit of the common prosperity policy. And finally, in my opinion, a potential delisting of the Chinese companies from the US market could also lead to the Chinese market suffering a near-term, fall, because people will start, rushing out of these Chinese companies, and their share price falls, and the benchmark index will follow. Yeah. And that's about it for the catalyst as well as the risk.
All right, thanks, Gian, for sharing. So I think the potential delisting part from the US stock market, they've been saying it for quite a while. I think it's been at least 2 years. I've been hearing, but so far I think that remains it has always remained in people's minds, but we can say that it might drag on. Okay,
Yeah.
let's move on. Let's move on to perhaps some analysis of the individual stocks that you have actually spoken about. Maybe Alibaba, Meituan, and Tencent.
Yeah,
These are the stocks that I think a lot of the audience and the investors and the traders love these stocks, right? Because they are like the key players in the Hong Kong market.
Correct. So allow me to share my technical analysis for the 3 individual counters. First, on the Alibaba. So you can see from the chart, again, it's on a downtrend, Alibaba has taken quite a big hit. Let me use a weekly chart and see if I can, show you. As you can see, from a high of about $310 back in October 2020, it has fallen all the way down to close at 66.50 Hong Kong dollars at lunch break. So there is a fall of like, about 60-70% from its high. Yeah. So the near-term outlook, of course, is we do see, just like the Hang Seng Index as well as the Seng Tech, we see 2 bullish candlesticks yesterday as well as today. So along with the stochastic also pointing, in an uptrend and pointing upwards, I could see some near-term rebound of the Alibaba, possibly up to around, maybe say to be optimistic, around the $78 level. If this bullish movement continues till the end of the week, we could, potentially see the share price of Alibaba going up to around the $78 mark. But on the other hand, if there are any, negative news on this, on the Chinese tech sector, then, we could see the share price of Alibaba going perhaps even lower than the low of around $61, which is, there's a support around this price point. So that's for Alibaba. So next we have Meituan, which is also another common tech counter, and perhaps many have a stake in this. Just like Alibaba, let me show you in a weekly time frame. It's also all the way down. You can see, somewhere around February 2021, the share price has sank all the way from 460 Hong Kong dollars all the way down to about 144 Hong Kong dollars, at lunch break. So my near-term outlook, just like Alibaba, we could see some potential rebound up to around the $163 mark if the broad market continues to be bullish. On the other hand, if there are some negative news sinking in, then we could see the share price going below $120. Again, this is just my personal analysis based on my technical analysis to share. And finally, we have Tencent. Tencent, same thing. Its share price is, on a downtrend, all the way down from about 775 Hong Kong dollars to about 229 Hong Kong dollars currently. So the broad trend, again, is the same, down. So if I were to look at it from a daily time frame, again, it's the same as what we have seen in the share price movement of Alibaba as well as Meituan. They have shown two positive candlesticks in a row. So in the near term, if the market continues to be bullish, we could see possibly going up to around the $282 mark. And on the other hand, if the share price were to reverse back down again, then it could potentially go below 200. I mean, there's a support line around the 201 Hong Kong dollar level, as you can see here in the chart. So, it could test this point, and if this point doesn't hold, then it could potentially go down below 200. But at this point in time, I think we could see some positive movements over the next couple of days, provided everything goes smoothly. And another thing to note for tonight, the Fed will be announcing its interest rate decision. So the consensus is that it will increase interest rates by 0.75 basis point for the month of November. So everybody is already expecting that. But what people want to hear is their views for December and beyond. I saw news this morning from CNN that the Fed is actually considering to slow down the interest rate hike starting from December. And if the Fed really says something along the lines of reducing interest rate or slowing down at least slowing down the rate of increase, I think the market will definitely fly up tomorrow, the Singapore as well as the Hong Kong market. So all eyes will be on Fed tonight.
I hope so, certainly. Yeah, it's been a very gloomy past few months, right?
Yeah.
So, but of course, that is why we have Alvin on this call as well, right? On this session, not this call, right? On this session as well, to actually talk about how investors and traders can actually, make use of DLCs to actually enhance their position, because DLCs offer short as well. Yeah. So, Junyuan, sorry to interrupt you. Is there anything else you would like to share before we
That's
move
all.
on
That's
to...
all. Yeah. That's
All
all.
right, awesome.
Yeah.
So if you have any questions for Junyuan, please put it in the comments below. I think he will try his best to type it out.
You can see, you can put your comments in the thread and in my investing note profile. I've created a thread specifically for today's session. So if you have any questions, feedback, suggestions, do feel free to let me know in the comments. Thank you.
All right, cool. So let's move on to Alvin. Hey, Alvin. Yeah, so I think we were talking about, how DLCs can help them to actually take both long and short positions. That's why we are having this tournament as well, for people to actually try out, during this kind of gloomy times. So perhaps, can let us know what are your thoughts?
Okay, sure. Thank you, Evan. Thank you, Junyuan, for your insight. First of all, I think it's really good that we have this session today. I mean, like this week, and also the game as well. Because like in the past few months, if you ask me, like personally, I'm from Hong Kong, and I look at the. I mean, I'm also responsible for the Hong Kong market as well. So I look at the Hong Kong stocks every day, every minute. Like it's been a very difficult, maybe past quarter for all of us who invest in Hong Kong stocks. We have been talking about, like the Hang Seng market, the Hang Seng index testing low, like 10-year low, 11-year low, 12-year low. I think now it's like 13-year low, right? So last time it was this low was like already 13 years ago. So it's like really, really very, very bad, market sentiment. And so Junior has already shared a lot, like the reasons why HSI has been, dropping so much. And but I think just recently, I think people are already talking about, like, can any more, bad news come out? Probably, but probably less than the potential good news, because for example, like Junior just shared that the one of the biggest reasons why the Hong Kong market shot up that much yesterday was because of the rumors that the Chinese government is going to, consider releasing, relaxing a bit the policy, right, on the COVID. And also on the other hand, the US side, we're also talking about, if you look at the US market, like in the past few days, it's been, quite bullish. We as a Hong Kong person, we always talk about how come, every night when the US is up, but the next day the Hong Kong can still be down. It's just doesn't make sense, right? But then, we are already talking about that there's a chance that, the Fed is going to consider, right, like to reducing or to slow down a bit the rate hike pace, right? So I think it's a good time to look at the Hong Kong market. Even if you don't do any leverage investment, I think even if you only do long-term investments, I think it's actually also a very good time for you to look at it. But for leverage trading, for DLC trading, I think it's even better because, for example, just yesterday, if you look at some of the Hong Kong stocks, for example, Meituan that Junyan just shared, Meituan yesterday shot up 10% in just one day. And actually, if you look at intraday movement, highest it went was, I think it was up by 15% in just one day. And imagine if you just spare a little bit of your capital and put it in a long leverage product, and that product, for example, if that product provides you with a 5 times leverage, that means when Meituan was up 15%, that product would have been up by 15 times 5, which is 75% already in just one day. You don't even have to hold it overnight. You just do a day trading, and then even if you didn't catch the full trend, if you caught like half of it, 7.5, then you already got like maybe 30 something percent already in return, right? So that's the obviously the beauty of leverage trading. And obviously, the reverse is also true, right? Your risk is also magnified. So this is something that you have to beware when you do leverage trading. And that is why I think DLC would be able to help, because one of the benefits of using DLCs is that on the reverse side, if you bet on the wrong direction, your loss would be kept by at the initial capital that you put in. You cannot. It's not like a margin trading on stocks. You won't be asked for a margin call. You won't need to top up. The worst it would just go zero, right? But then on the upside, it could be unlimited. If Meituan is up by 20% instead, then your DLC will be going up by 100% already. Or if not more, if Meituan goes up even more, then the DLC can go up even more. Okay, so let me just quickly share our website, because our website is a great tool for you to check out what DLCs are available and which one you can potentially take a look at. All right, so let me just quickly go to the DLC website here. Okay. Can you see the website?
Yes, yes.
Yes. All right. Okay, cool. So our website address is very easy. It's just dlc.ubs.com. Okay. So first of all, the DLC is a daily leverage certificate, as mentioned by Evan, and we are relatively new. I mean, DLC is still relatively new. It's just been in the market for around 5 years. So I think a lot of investors are still, not too familiar with it yet. Maybe they've heard of it, they haven't tried it. So I think today's a great session. I hope after today's session you will learn a bit about DLCs. And quickly, if we go to the product search, right? So DLC has been around for 5 years, and we UBS we have started in the market in just this February. So we have only been in the market for 8 months. But then we have already issued 91 DLCs for you to pick. Okay. At the moment, all of the DLCs that we issue are of either Hong Kong underlyings or US indices underlyings. Okay. So you can find all the stocks or index that Junyuan just mentioned. For example, Hang Seng Index, Hang Seng Tech Index, or Alibaba, Tencent, or Meituan, or even other second to third tier stocks as well. All right. And just very quickly, like how DLC can help you enlarge your return, right? So DLC, as the name implies, daily leverage certificate. So it's a leverage product, obviously, and then it's a daily leverage product. Okay. Daily leverage means that the leverage is fixed on a daily basis. It doesn't mean that the product is only for day trading. You can day trade a DLC, but you can also hold a DLC for longer period of time. The daily in the name means that the leverage relationship is fixed on a daily basis. For example, 5 times DLC means that every day when you look at the stock and then when you look at the DLC, the relationship will be 5 times. For example, Tencent is up 2%, then you can expect a 10% up in the long DLC. And obviously, DLCs come in 2 types. It's either long DLC or short DLC, as you can see from the name. For example, the first one that we see here today is a Xiaomi 5 times short DLC. Okay, and this UB means it's issued by UBS, and then this is the expiry date of the DLC. So you can pretty much tell what this DLC is about just by looking at the name. And the one on the second is the Meituan 5 times long. Okay, this is a 5 times long DLC, and then for example, Meituan, I think today is still up a little bit. Meituan, okay, Meituan today is maybe you can say it's up a little bit. It's up by I think 2-something%. Let's check out this DLC together. Okay, 3.3% up in Meituan today, after going up by 12% yesterday. Today is up by another 3%. So it's really the time I think we can start paying more attention to the Hong Kong market, and especially the big cap tech stocks. Okay, so Meituan today is up by 3%, and then this DLC is up by around 18%. So as you can tell, it's pretty much a 5 times relationship. So it's very easy. So I think one of the beauties about DLC is that it's a very easy, simple leverage trading product, because you can tell you know what to expect. Basically, when Meituan is up by 3.3%, the long DLC should be up by around 15-16-ish or like 18-ish%. Okay, just by doing a times 5 on the daily return. Okay, and so I think I'll just go quickly to the product range. So these are all the stocks that we have issued DLCs on so far. As you can see, it's all the Hong Kong stocks and also the Hong Kong index, and as well as 2 US indices, namely the Nasdaq 100 index as well as the Dow Jones Industrial Average. Okay, and so some people may ask, how what the US indices DLCs track during the SGX trading hours. Obviously, they will be tracking the futures. As many of you know, I'm sure that the US indices futures basically trade around the clock. So they still move during SGX trading hours. Then that's what our DLCs are tracking. Okay. And I know that we're running out of time. So I think let me just mention just one more thing about the DLCs. So I would just do a quick walkthrough of how we choose a DLC. All right. So let's say let's use Meituan as an example. For example, you see that Meituan is might have hit the bottom already. You're still bullish, especially like if you look at stocks that have just shot up by a lot the previous day, right? Let's say today you're still bullish. You probably think that the stocks may still go up a little bit, but maybe not as much as yesterday, right? During these kind of cases, I think you can definitely check out more the leverage products. And if you go to Meituan Long, let's say, sorry, this I've already chosen, right? So let's say you check out the Meituan product range, all right? Meituan, okay, 3690 Hong Kong, and then long. You see that there are two DLCs, right? Okay, here it may not be a very good example because the second one, basically there's no price because the price is just too low. All right. And let's pick another one. Let's pick one that has got a few DLCs, right? For example, I think BYD should be the one. All right. Yeah. So BYD, the long, all right. And then you see that there are three DLCs. All of them are 5 times long. So in theory, all these three DLCs would provide you with a 5 times relationship, right? In that case, actually they should be indifferent to you, right? In this case, I sometimes see people would just pick the DLC at the lowest price because they can buy more shares, right? But I want to emphasize that actually it's the other way around. It's the exact other way around that we recommend investors to do. In this case, we should be picking the one at the highest price. And why is that? Because the one at the lowest price, because of the fixed tick size when the price is below a certain threshold. In this case, you will see that these DLC, the cheapest one, the sensitivity would be very, very low because the tick size is too huge in terms of percentage. So this DLC would require a lot of movement from the underlying stock to just, tick up or down this DLC by one tick. And this is just a very bad trading product. And it's a bad product, in any aspect. All right. In this case, you should be picking the one at the highest price because this DLC at the highest price, you can see the sensitivity is the smallest number, meaning that it requires the least amount of BYD movement to trigger one tick move of this DLC. So in this case, you should be picking the one at the highest price. And this is something that I think this is one of the misconceptions about DLCs that quite a lot of investors have. So this is something that I would like to highlight. And so I hope you learned something about DLCs today. And then please let us know if there's any questions about DSC in the comments section or even after today's session. If there's any any question at all about DLCs, please you can reach out to Junyuan. You can also reach out to us at this email address, or you can simply call our hotline here 800-852-3932. All right. So I hope you learned something about DSC, and I'll pass the stage back to Evan. Thank you.
All right. Hey, thanks, Alvin, for the very comprehensive explanation of DLCs. I think a lot of investors and traders sometimes, yeah, like you said, they will try to trade the cheaper one because they can buy more shares. But ultimately, I think you have to take into account the sensitivity as well. Right. So thank you both, Alvin and Junyuan, for your very kind sharing. Right. So I think one more thing to note is that I think Alvin, you mentioned earlier that I think before we really started this session that the Hong Kong market might be having closure due to some typhoon, right?
Yes, I'm based in Hong Kong, and it's going to be typhoon number 8 in Hong Kong very soon. So there's a chance that the Hong Kong market will close earlier today. So watch out for that. And I think if I'm not wrong, I think we probably might have only maybe 30 minutes in the afternoon for you to trade. So if you're interested, act quickly today, or well, obviously you can wait until tomorrow.
All right. Thank you, Alvin. Thank you, Jinyan, for your kind sharing. So without further ado, we'll end the live stream here. We'll have another one upcoming. We'll let you know again. Right. So meanwhile, please go into the tournament page and see what other people are trading. And you might just win some prizes as well. All right. Thank you, Alvin. Thank you, Jinyan. Thank you, everyone. Have a great day.
Thank you, guys.
Thank you, guys.
Bye-bye.
Bye-bye.
Bye.
Bye-bye.